Welcome students to today's class. In the previous class we have learned the single entry system introduction and how to prepare the profit and loss statement. In today's class we are going to learn how to prepare redrafted statement of affairs or the revised statement of affairs. Now, revised statement of affairs is prepared to know the financial statement. It is prepared after preparing the profit and loss. The main reason for preparing such revised statement is to know the financial position of the business at the end. How we have balance sheet, in the same manner this statement shows all the adjustments in the statements itself. For example, the depreciation provided or provision for bad debts, whatever adjustments are being made in statement of profit and loss are re-affected in this, and then they are seen both assets and liabilities are tallying or no. So to prepare this revised statements we are having certain steps. So a revised statement always, when it will be remember that revised statement always starts with opening capital. Then in this, if additional capital is introduced, that has to be added. So these adjustments are relating to capital only. So begin with opening capital. Any additional capital is there, add it. If interest is given on capital, add it. If net profit is there, add, or if net loss is there, deduct it. Then at the same time, drawings and interest on drawings, if both are given, they have to be deducted. So whatever figure arrives after adjusting these 4-5 entries according to the given transactions, it will be showing the opening adjusted capital. Now we'll remember certain points while preparing the revised statements. Now revised statement is prepared after taking into account the closing balance of assets and liabilities. So remember students, only capital starts with opening capital and make the adjustments. Rest of the assets, liabilities that are existing, all closing balance of such assets and liabilities only will be taken. Then second, all adjustments which are made in profit and loss account have to be shown in this statement. Now we are having prepaid expenses and outstanding incomes. So as in financial statements, prepaid expenses or outstanding incomes are treated as assets. So these prepaid expenses and outstanding incomes have to be taken as assets on the asset side. Similarly, we are having outstanding expenses and advance incomes. So both should come on the liability side. Now provision for bad debts, discount on debtors, bad debts, which are all deducted in the profit and loss account, the same should be shown or deducted from the debtors in the asset side. Depreciation or appreciation of assets also should be shown to the fixed assets either by adding or deducting. Then the capital should be shown along with the other liabilities. So these points are very important. We have to take only the closing balances because it is prepared at the end of the year. Now this is the format of the revised statement. So we can see we have started with opening capital, additional capital, net profit is added, drawings are deducted. So after doing these adjustments, we are having the adjusted opening capital or adjusted capital. Then other liabilities like creditors, bills payable, overdraft, outstanding expenses, advance incomes, all are shown on the liability side. Next, land and building, if appreciation is there, add it. Machinery, if any depreciations are given for fixed assets, add it or deduct it. Then you will show all the current assets. Now debtors, you have to show all the adjustments. So this is the format how exactly the revised statement of affairs. So in short, I can take that this is similar to balance sheet with adjustments. But I can't take this revised statement as balance sheet because the figures in such statements are always on assumption basis. They are not the actual figures. That's why we are not treating it as a balance sheet. Now we'll see one problem how we can prepare. Now Kamath has not kept his books of accounts. So we are going to prepare a revised statement of affairs and the statement of profit and loss. So we are having the opening balance and the closing balance. Year begins on 1/1/2016 and ends on 31st December 2016. We are having bank balance 1 lakh and 90,000, cash 10,000 and 36,000, debtors 20,000 and 80,000, creditors 10,000 and 46,000, bills receivable 20,000 and 24,000, bills payable 4,000 and 42,000, car is 80,000, stock is 40,000 and 30,000, furniture 8,000 and 48,000, investment is 40,000 and 50,000. So this is a statement of affairs. We'll see in the next slide what is having. Now they have given adjustments for the year that have to be made. So Kamath has withdrawn 5,000 cash per month for personal use. Depreciation 5% on car and furniture 10%, outstanding rent 6,000, fresh capital is 30,000. Then we are having the treatment of adjustment. So we are having 4 adjustments. We'll see how it is treated. Now first is drawings. Now drawings is added to closing capital because if this drawings were not done, then my closing capital would be more. So it is added, and in the revised statement it is to be deducted, so that after this, because of this drawings followed, we are not getting the original capital. What it is, it has to be known. So once if it is added, to know what is the original capital, I have to deduct it. Next, that is capital at the end of the year. Now depreciation. Depreciation is deducted from gross profit. So after comparing the difference between closing capital and opening capital, whatever gross loss will be or profit will be there, from that it has to be deducted or added in case of losses. And because it is permanent loss, it has to be deducted from the respective assets in revised statement. Outstanding rent. It is the rent which is to be paid but not yet paid. So it is the expense of the current year, so deduct it from gross profit and show it as a liability in revised statement. Now fresh capital introduced. So fresh capital, if it was not introduced, then my closing capital would be more or less, or it would be different. So it is deducted, and during the year it is an additional investment made, so it is added in revised statement. So we'll see the solution. So first we have to know what is the closing and opening capital, because our problem has given the list of assets and liabilities. So I will draw the statement of affairs, liabilities on my left hand side, then one column to show the opening capital and the other column to show the closing. Then I will go for assets. So again I will draw 2 columns, one for opening balances and other one for closing balances. Now we'll start entering the respective assets and liabilities. So on the credit side I have creditors 10,000 for the opening and 46 for the closing. Bill payables we have 40,000 and 42,000. Next is cash. We are having 10,000 and 36,000. Next, debtors we are having 20,000 and 80,000. Bills receivable 20,000 and 24,000. Car only it is at the end of the year, so 80,000. Stock 40,000 and 30,000. Furniture 8,000, 48,000. Investment is 40,000 and 50,000. And bank we are having 1 lakh and 90,000. So as per given information, we have entered all the assets and liabilities. So you will now take the total of the asset side. Always in statement of affairs, asset side total is more than the liabilities. So my total of assets minus the given liabilities, the difference will be my capital account. So opening capital is 2,24,000 and closing is 3,50,000. So the calculation of capital is done on the basis of accounting equation assets minus liabilities is equals to capital. So in statement of affairs, we follow the formula assets minus liabilities is my capital. Now we prepared the opening statement of affairs. We'll go for the next step, that is preparation of statement of profit or loss. So now in statement of profit or loss, always we have to start with my closing capital. So my closing capital is 3,50,000. Now during the year, Kamath has withdrawn 5,000 per month. So that 5,000 per month means for the whole year I should see what is my drawings, total drawings. So 5,000 into 12 gives me 60,000. This is as per adjustment 1. So 3,50,000 plus 60 gives me 4,10,000. So if this 60,000 was not existing, my closing capital would be 4,10,000. Now from this I have introduced additional capital, that is on 30th September I have introduced. So whatever amount is introduced, the additional capital is to be deducted. So if this 30,000 was not there, then my closing capital would be less. So from 4,10,000 minus 30, I will get 3,80,000. Now this 3,80,000 is my original actual this closing capital if drawings and the closing stock were if drawings and additional capital were not existing, we would have a capital of 3,80,000. But it is showing 3,50,000. But this 3,50,000 is because in between we have done drawings and the fresh capital. But if these two were not existing, then I would get 3,80,000. So how it is calculated? Closing capital, then I should take drawings should be added. I will get 4,10,000. Then I should deduct the additional fresh capital 30,000. So I will get my closing adjusted capital. Now from this closing adjusted capital, the opening capital which is opened 2,24,000, it is to be taken. So I will get a gross profit of 1,56,000. So the difference between adjusted closing capital and opening capital gives me the gross profit. Now from this gross profit, I should add if any incomes are there. But we do not have any incomes, so it is just given as dash. Now we'll take the expenses. So adjustments 2 gives us the depreciation adjustment. So depreciation 5% on motor car and 10% on the furniture. So all depreciations will be charged on the closing balances because it is given at the end of the year. So 5% of 80,000 is 4,000, 10% of 48 is 4,800. Next you are having adjustment number 3, which is giving us 6,000 as outstanding rent. So the total of my expenses amount to 14,800 and we will get 1,41,200 as our net profit. So gross profit minus the other expenses gives us the net profit. Students, by mistake we have given here as closing stock, which has to be closing capital. Now the last statement we have to show revised statement of affairs. It should not be combined, it should be revised statement of affairs. Now this is revised statement of affairs. By print mistake it has come revised statement, but it should be redrafted statement of affairs. Now we are having creditors, all closing balances only are taken. So creditors 46,000, bills payable 42,000. Now coming to our capital, we have taken opening capital 2,24,000. To this I have to add additional capital 30,000. Then my net profit 4,41,200 has to be added, and then I will get a total of 3,95,200. So to opening capital I should add additional capital and net profit. The resultant figure will be my total opening capital for that year. But since drawings are done during the year, it is showing reduction of my capital, so it has to be reduced. The total opening capital will be 3,35,200. Next I have is outstanding rent, which will be giving me 6,000. Now coming to the liability side. So now this opening capital or opening balances are not considered. Only the closing balances are considered. So cash is 36,000, debtors are 80,000, bills receivable we are having 24,000. Now car is given 80,000, depreciation has to be deducted 76,000 will get. We are having stock of 30,000, furniture is there 48,000, less depreciation, so 43,200. Investment we are having 50,000, and bank balance is 98,000. Now total the liability side as well as the asset side. Now this total of liabilities and assets have to be equal. So it will come 4,38,000 and 4,38,000. So this will give me an end. So if my assets and liabilities tally, it will show me that my revised statement of affairs is correct. So this type of problems may come for 12 marks. In the next class, we'll see for one more problem. Till then, take care and be safe. Thank you.